Hello, this is Dale from Loan Cab, and I'm here today with Jack, a non-QM underwriter. We're here specifically to talk about what we call investor cash flow. And this is for real estate investors out there looking to acquire properties in a manner which maybe you're not familiar with, but more aggressive than maybe what you've dealt with in the past. And Jack, I want to start with one of the questions is, do you have to have a job to do investor cash flow?
You don't have to have a verifiable job.
Okay.
But the main caveat of this program is you have to own a primary residence.
Okay.
That's the big thing. So income, there's no income required on this program. We don't require you to supply tax returns, pay stubs, anything. All it qualifies off of is the actual rental income from the subject property itself. So to let you know an easy way, if your rents are $1,000, your mortgage payment's $1,000, you qualify.
A 1-to-1 ratio, right?
Yes. We will go more aggressive than that as well if your credit score is over 700, but there's a slight add on the rate for that, but you can actually have a 0.8 debt service coverage ratio, so it's like a commercial loan product. So what that means is your rents may only be $1,000, but your mortgage payment is $1,250 and you'd still qualify.
Okay.
So we have to make the qualification.
So you can be a self-employed real estate investor. That's all you do. You don't have to supply tax returns. Obviously, you have to have a decent credit score, 660 on average, would you say?
Great. For the lower debt service coverage ratio, 700, but 660 is the standard.
Okay. And then typically, if you're buying a property and the PITI on that property is $1,000, how many months of reserves do you need off that? 6?
You need 6 months, but only on the subject property.
On the subject property. So if you own 20 other properties, there's not a reserve requirement on that, just the subject property.
Correct, just on the subject property. And the nice thing about this product is you can have an unlimited number of finance properties. Whereas most places, they want you to have no more than 5 to 10, depending on the investor that it is. On this program, you can own 1,000 finance properties, we don't care.
Okay. And then does the person, it's purchased for business purposes, correct? So is it purchased by an individual or an LLC? Or both?
So this is really, the borrower still applies, qualifies, and signs for the loan. You know, you can either deed it in the name of the individual themselves, or it can be deeded in the name of an LLC. So what we allow for that, which is huge, by the way. So what we allow is in the LLC, you can have up to 2 people that are part of it. If there's 2 people, they both have to be on the loan. They both have to apply, sign, and qualify for the loan. Individually, we're going to take the weaker of the 2. Okay. So the LLC has to be set up specifically for investment properties. So it couldn't be somebody who owns, say, a restaurant that's Joe's Hot Dog Stand, LLC, that wants to put a property in this.
It has to be dedicated for investment properties.
Correct, yes.
Okay. Last question is, what if you're a real estate investor? You know, 10 years ago, there was a lot of, in the last 10 years, there's been issues in this whole industry, right?
Sure.
How long do you have to be out of a major credit event to qualify for a program like this?
Only 2 years.
2 years?
2 years, which is nothing. I mean,
major credit event meaning a bankruptcy or a foreclosure?
Correct, or short sale, right.
Short
only
sale.
2 years. You do have, like I said, you have to own a primary residence. We do need all mortgages that you own to be 0 times 30 for the last 2 years.
Okay.
You also need 3 consumer trade lines, unless you have other mortgages. There would also be 0 times 30, meaning no late payments for the last 2 years.
Now, do those consumer trade lines all have to be open and active, or can there be a past history of those, although they're not open now?
They have to be open and active and have activity within the last 12 months to be counted under that.
Okay.
So the other nice thing is you only have a $75,000 minimum loan amount.
Okay.
You can, if you're a seasoned investor, you can actually pull cash out of the properties you currently own to buy additional properties.
Okay.
You can have up to 5, finance properties on this program at one time, up to $2.5 million. And one of the nice things for these loans is, investors who typically go to a small bank to try and get a loan, if a small bank were to do this loan, they might say, all right, well, you don't qualify, income-wise, but we're going to cross-collateralize the properties you do have. So you're pledging additional properties. They're only going to give you a smaller term, which is typically 12 to 36 months, because they want to see how it's going to perform on their books. And they're also going to make you give a personal guarantee that if that loan goes bad, they can go after all your personal assets, to recoup their money. Ours is just on the subject property. It's either a 7-1 meaning it's fixed for 7 years, or they can do a 30-year fix, which is only a quarter higher on the interest rate, which is nothing.
And do you offer interest only on that?
We do offer interest only.
Okay. Last question: if I'm buying if I'm a real estate investor buying a $100,000 single-family home, and the down payment's 20 or 25%, how much of that 20 or 25% has to be my own funds?
All of it.
100%.
Yeah, no gifts.
Okay, no gifts. Very good. Well, thank you, Jack.
Of course.
Appreciate it.
Yeah. Send some loans.
Send some loans.
Okay, we got it.
How long is it, Peter?